Portfolio Builder members, we nailed it. We predicted that the S&P 500 would either trade flat or down between Monday and Wednesday, and today the market dropped down quite a bit. This put $1,700 of profit in our pocket from the covered call we wrote on Monday. And guess what? We're going to do it all over again today. Here's a look at the S&P 500 really quickly. And again, the strategy is to purchase 100 shares of the SPY ETF, which costs a lot of money. It costs just under $30,000. Then we sell the option to speculate that the value of our ETF, which represents the top 500 companies in America, is going to go up dramatically in a 48-hour period. And guess what? It almost never happens. So that's how we can generate consistent retirement income from simply owning 100 shares of the SPY. Now, the $1,700 we're pulling every 48 hours is from having 1,700 shares of the SPY ETF and writing 17 covered calls every Monday, Wednesday, Friday. And if you don't have $30,000 to follow our program, don't worry. We have what we call the poor man's income system that only takes $4,000 of capital to follow. This is on the TBT trade. And this has actually outperformed the SPY ETF covered call strategy so far to date. It's really good for anyone with less than $100,000 of capital because the big downside is that there's a lot less liquidity in the TBT ETF compared to the world's #1 stock in the world, which is the SPY ETF. It is by far the most highly liquid, highly traded stock in the history of mankind. It's the only stock that offers 48-hour covered calls for generating retirement income every Monday, Wednesday, Friday. This means you can compound your profits 150 times a year. Let's take a look at today's trade alert. First, I'll look at the screenshot of what we're putting in our track record, and then we will look at the real-time prices to see if there's any adjustments that might be considered. So last Monday, we sold to open 17 shares of the March 20, 2019 277.50 strike call option. It's called a covered call because we own 1,700 shares of the SPY. Today we're buying to close that position for about $1 less than we collected initially. So the easy math is we have 1,700 shares and we made around $1 profit on those shares from the covered call trade. And this is while everyone else is just flat out losing money because they're just long equities. Here's today's new trade alert. And the key thing to remember here is really the difference between the last trading price and how far below I'm writing our covered call. This allows us to do very well if the market goes flat, slightly down, and protects us all the way to this 275 level. So you can see we're about $6.55 below the current trading price, and we're collecting $6.77. So if the market were to jump up from here, we would only be able to enjoy around 22% or 22 cents of profit per share we own. However, if the market goes flat or down, we will make a profit and be completely protected down to the 275 strike price. So today's trade alert is to sell to open one contract per 100 shares of the SPY ETF you own, with a strike price that is between $6 and $7 below the trading price when you take the trade. As of writing this, that's the 275 strike. So we're trying to protect our capital in a period where we know there could be some event risk. Now it's my job to make this as easy as possible for you so that you don't have to do all the hard hours of studying the markets and following every little thing that's going on. But the bottom line is we're going to play it safe through March. And because we're seeing some weakness today, this has reconfirmed what we're predicting is going to happen in the markets. And there's a huge event today that could catch a lot of investors by surprise. So as you can see, to drop below our current price, this would have to fall all the way down to here. Let me zoom in a little bit. For us to lose any money between now and Friday, the S&P 500 would have to drop all the way down to this level before we would see any harm. In fact, we would be making a lot of money while everyone else is losing a lot of money. And it's a very, very simple and easy thing to do, especially when you're only having to manage one stock. But remember, the SPY ETF represents 500 companies, and the largest position is Microsoft. Now that's a nice chart, from $15 to $117 since 2009. So this position in the SPY ETF is a 5% position. So 5% of your money owns Microsoft, and it's diversified between hundreds of the top corporations. Okay, so let's look at how we actually put this trade alert into our platform. And remember, you have your own copy of this spreadsheet to manage your investments. Now, quite frankly, this strategy is so easy, you can do it in your head. All you need to know is how many hundred shares of the SPY ETF do you own, and then follow the covered call. You can do this on your phone. We love Robinhood app for that because they pay for all your commissions. They have absolutely no commission costs. So here we are in the rich man income strategy. Next, we'll cover how to hop into the poor man income strategy, doing the TBT. But let's just review the setup for trading the SPY. First of all, you have to go to your spreadsheet. Make sure you have a target income at 90%. That's going to allocate most of your capital to owning the SPY. And it's going to calculate how many shares of the SPY you can afford to purchase with your initial deposit. So in this portfolio, the initial deposit was in December with $500,000. And since then, this was launched December 10th in the middle of the Christmas massacre, and the portfolio is up 8.36%. What's important to remember is we're not trying to beat the market. We're not trying to predict which little sector is going to outperform. In fact, we want to do the opposite of that. We want boring, steady, consistent returns. So the next step for you guys just getting started is step 1. Put that at a 90% target income and a 10% cash if you want to follow the SPY strategy. If you do want a little position in the bonds, in the TBT trade, for those of you who want to do the TBT trade and the SPY trade, it's easy. Just try putting a 10% spot right there. This is going to have to equal around $4,000 of your total capital. You want to leave at least 10% in cash. In rare times, I will hedge our portfolio to actually make even more profit if the market goes down. But I'm not expecting to do much of that in the month of March. And then the remaining percent of your allocation can go to the SPY trade. So let's look. After that, you would go down here and make your first purchase. So you're doing this in your brokerage, but you're making a copy of it in our spreadsheet. And if you're having a hard time seeing this, don't forget you can expand the video and see a zoomed in version of this. As well, in the email, you have a link to view this track record. So you can go through it line by line and see exactly how it all fills in. So currently, we are covering this position. So we have to move it down here. Now, what I did before I started the video is I moved all these trades down so I could put this up top here. But you could be just pushing your trades down below. So let's do it. Let's copy this. So I'm hitting Control C, and I'm copying this data from here to here. Now I'm assuming that you're using Robinhood for $0 commissions or something like that, Interactive Brokers. But even if you're using a high-end broker-dealer, the cost on writing one option contract is not that expensive relative to how much income we're bringing in. And because we're only owning the SPY ETF, this is a very commission-efficient strategy. Okay, so now I'm going to scroll up and grab the price we paid, or that's the credit we took in, rather. And today, to purchase this position back, we had to pay $407. And this is not going to be the exact price you'll pay, but the idea is we're rolling over our covered call position. Okay, so we made an 18% profit on that in-the-money covered call for a net credit of $1,547. And when I first started shooting that, we were actually able to buy it back for under $4, which would have pushed us up towards above $1,700. Okay, and then you don't have to keep track of the contract names, but if you like to be anal and keep them, we do provide that. Okay, so now let's go put our new trade. I'm going to move this date to here, and this is a nice trick. If I just click the date, voila, Friday, Monday, Wednesday, Friday, Monday, Wednesday, Friday. That's all you got to remember. The new covered call strike price is a little lower than last Monday's, or rather, yeah. So punch that in. The covered call brought in 677. There is once again 17 contracts. And so this brought in a credit of $11,509. Now we're not expecting to make $11,509 by Friday, but this consistent $1,000 to $2,000 worth of profit every 48 hours is very possible. And in this situation, we need the market to go flat or down from here, but not below the 275 strike. If that happens, we're sitting very pretty. And we will repeat this trade on Friday until we get to a certain level where we think it's safe to start writing the covered call above the trading price. So that's literally all we had to do today to follow the trade. If it took you more than 2 minutes to do the trade, you were a slowpoke on this one. In terms of the return, it does jump up higher than it really will be once we cover the position. So expect that to go down a little bit once we cover the position on Friday. If the market goes up, we do get to enjoy around 22 cents per share. If it goes flat or down, our profits go up substantially higher in the next 48 hours. Now, the TBT trade is doing just as well as the SPY trade, but it only trades once a week. And if you wanted to hop into this portfolio, the step one would be to give yourself some allocation to bonds. In this model sheet, I'm only trading the TBT, but you could easily diversify your income by trading both, which we just discussed how to do. So then you enter your trade for purchasing the TBT, and then you do your covered call. So the covered call we're in right now brought in a large credit of 45 cents, and it's trading right in the strike price range. So that was a great trade last Friday, and this will be rolled over this Friday. But for those of you just getting started, you don't want to wait around, here's the trade that is very similar that you could put on right now. So first you'd have to get, in this example, 1,000 shares of the TBT. But if you wanted to just get 100 shares, you would just change the quantity to 10. And then I'm writing the strike price, the next level above the trading price. So this means I think the TBT will potentially go up, plus we can get the credit from selling the covered call. So we can get a double payday on this trade alert. So if you do put on this trade, you might look at our Friday alert to see if you wanted to roll over and follow the new alert. But it might just very well be this exact same trade. So thanks again for your time, and please join us on our daily Q&A webinar, which starts in just a little bit. There's a link in your email, and I look forward to talking to everyone and answering all your questions about our very simple retirement income strategy.